The courage to be contrarian, thinking for yourself in an age of the herd. I want to discuss with you today one of the most challenging yet most rewarding aspects of investing. It's a challenge that has nothing to do with mathematics, nothing to do with accounting, and everything to do with the human heart and mind. I'm talking about the courage to think for yourself. The world is wired for consensus. From the time we're children, we're rewarded for agreeing with the teacher, for fitting in with the group, for not making waves. This instinct follows us into adulthood and becomes magnified in the financial markets, where it manifests as what we call the herd. The herd is a powerful emotional creature. It moves with a momentum that feels intelligent because it's popular, and it feels safe because it's crowded. But in investing, what is popular is rarely profitable, and what is crowded is rarely safe. Let me tell you a story about two farmers. The first farmer listened to all his neighbors. When they were buying livestock at high prices during a drought, he did too. When they were selling their grain during a glut, he followed suit. He always felt secure because he was doing what everyone else was doing. The second farmer studied the weather patterns, understood the soil, and watched the market cycles. He often found himself buying when others were selling, and selling when others were buying. His neighbors thought he was peculiar, even foolish at times. But over the years, while the first farmer struggled to make ends meet, the second farmer prospered. He understood that following the crowd in farming, as in investing, often leads you to plant at the wrong time and harvest at the wrong time. The herd is driven by two primal emotions, greed and fear. In times of euphoria, greed convinces the herd that trees will grow to the sky. They see others making money and are terrified of being left behind. So they rush in, pushing prices to levels that no sober calculation of value could ever justify. They are not buying businesses, they are buying the excitement of a rising price, and they are paying a premium for the privilege of participating in the crowd's enthusiasm. Conversely, in times of trouble, fear convinces the herd that the world is ending. They see prices falling and imagine the decline will continue forever. They rush for the exits, selling wonderful businesses at fire sale prices, not because the company's long-term prospects have changed, but because they cannot bear the pain of watching the ticker tape go down alongside everyone else. They are not selling businesses, they are selling their peace of mind. Your job as an investor is to recognize these two emotional states for what they are, temporary insanity. Your job is to be fearful when others are greedy, and to be greedy only when others are fearful. This sounds simple. It is anything but. It requires you to stand alone, to have your judgment questioned, and to have the fortitude to see a falling market, not as a threat, but as an opportunity. The market, in the short term, is a voting machine. It tallies up which companies are popular and which are not. This is the herd's domain. But in the long term, the market is a weighing machine. It measures the actual substance, the cold, hard, cash-generating ability of an enterprise. Your success depends on ignoring the daily voting and focusing entirely on the eventual weighing. So, how does one cultivate this ability to think independently? It begins with a foundation of knowledge. You cannot be confidently contrarian without a basis for your conviction. If you're going to bet against the crowd, you must know something the crowd does not, or you must understand something the crowd is ignoring. This knowledge comes from doing your own work. If you haven't done the work, any deviation from the herd is not independence, it is merely speculation. Next, you must develop a clear understanding of your own circle of competence. Operate only within businesses you truly understand. When you are certain of your own knowledge within a defined area, the opinions of those outside that circle become like background noise. The herd may be screaming about the latest technological fad, but if it lies outside your circle of competence, their excitement is irrelevant to you. Your ability to say, "I don't know, and therefore I won't play," is a supreme act of independent thinking. You must also learn to be comfortable with being wrong in the short term. The herd can remain irrational longer than you can remain solvent, as the saying goes, but only if you are using leverage or managing other people's money with a short-term focus. If you are an investor with your own capital and a long-term horizon, you have the luxury of time. You can afford to be early in your decisions. In fact, if your analysis is sound, you will almost always be early. The herd's recognition of value will come later. The independent thinker must have the emotional stability to be proven right over the course of years, not days. This is why temperament is far more important than intellect. Intelligence is common. The ability to keep your head when all those around you are losing theirs is rare. The financial media exists to amplify the herd's emotions, to make every minor event seem like a crisis, and every uptick seem like a revolution. The independent thinker learns to tune this out. He understands that the noise is not information. It is a distraction designed to provoke an emotional reaction. Ultimately, independent thinking is about taking ultimate responsibility for your decisions. When you follow the herd, you can always find someone else to blame. You can point to the expert who recommended the stock, or the economic data that seemed so compelling, or the fact that everyone was doing it. But when you think for yourself, the responsibility for the outcome rests squarely on your own shoulders. This is a heavy burden, but it is the only path to true ownership of your financial future. The most profitable investments are not the result of following a trend. They come from seeing value where others see only distress, of understanding a business's durability when others are focused on its temporary troubles. These opportunities do not appear when the sun is shining and the herd is optimistic. They appear in the fog of pessimism, when it requires a conscious, deliberate act of will to swim against the current. Do not seek the comfort of consensus. Seek the clarity of your own reasoned judgment. Build your portfolio one carefully considered decision at a time, based on your own assessment of value, not on the crowd's assessment of popularity. The road to investment success is not a crowded highway. It is a quiet, solitary path. It is walked by those who have the courage to be lonely when necessary, to be patient when it is difficult, and to be steadfast in their convictions when the world is telling them they are wrong. Walk that path. Trust your own weighing of the facts. And remember, you are neither right nor wrong because the crowd agrees or disagrees with you. You are right because your data and reasoning are sound. That is the essence of thinking for yourself, and in the long run, it is the only thing that matters. Now, I want to share another story with you about a wise old carpenter and his young apprentice. The young man wanted to build furniture exactly like all the other carpenters in town because that's what sold quickly. But the old carpenter insisted on using traditional joinery, on selecting the finest woods, and on building pieces that would last for generations. At first, the young man was frustrated because their furniture took longer to make and cost more. But over time, people began to recognize the quality. While other carpenters came and went, the old craftsman developed a reputation that lasted decades. His business wasn't built on following trends, but on maintaining standards he knew were right. This is the essence of independent thinking and investing. It's not about being different for the sake of being different. It's about having the conviction to maintain your standards in your process, even when it's unpopular. It's about understanding that true value isn't determined by popular opinion, but by underlying fundamentals. The independent thinker understands that markets are psychological as well as economic phenomena. He recognizes that the same business can be worth vastly different prices depending on the mood of the moment. His advantage comes not from predicting these mood swings, but from recognizing them for what they are and having the courage to act contrary to them. Remember that the herd is usually late. By the time everyone agrees something is a good investment, the opportunity is usually past. By the time everyone agrees something is doomed, the worst is usually over. The independent thinker learns to act before consensus forms and to exit before it dissolves. This approach requires patience above all else. You must be willing to wait for opportunities and then wait again for your judgments to be proven correct. You will often find yourself in the position of the farmer who plants before the rain comes while his neighbors wait for the first drops to fall. You must have faith in your analysis and the strength to withstand the doubt that comes from seeing others take different paths. In the end, the greatest investment you can make is in developing your own ability to think clearly and independently. No amount of market information can substitute for this quality. No financial model can replace it. It is the one advantage that cannot be automated, cannot be outsourced, and cannot be taken from you. Cultivate this ability. Protect it from the constant pressure to conform. Nourish it with study and reflection. And let it guide you not just in your investing decisions, but in all your financial affairs. The world will always have its herds, moving from one trend to another. But lasting wealth is built by those who can see beyond the current trend to enduring value. Be one of those few. Think for yourself.